Oh, howdy there, chat. Hello, hello, hello. Woo! Do we have drama, folks? Do we have drama? And it ain't for your mama. Oh my gosh, folks. Wow. Stocks are getting absolutely obliterated here today, folks. We got Meta earnings after the bell, my number one biggest stock by far and away in the public count. Let's get everything up and rolling. We got Google McDougal down almost 10%. We have Shopify down about 7%. We have AMD down over 6%. AMD's at $95 a share here today, folks. Snowflake's getting wrecked, 6%. Intel's getting hit heavy again. Amazon didn't even come out with earnings yet. They're getting slammed today, 5.6%. So Amazon's setting up pretty good into their earnings now that the stock's getting wrecked. Nvidia down $20 a share here today, folks. Nvidia's down $20 a share. Intuit's down 4.3%. PayPal, $51. Stop it. Just stop it, PayPal. Come on. Oh my gosh. I mean, what, are they going to give it for $1 a share soon? That's what it seems like we're going to. My gosh. Oobity Booba stock down over 4% here today. Meta's down to $300 going into these earnings. Yeah. Wow. Salesforce down about 3.5%. Adobe down 3.5%. MU down 3%. The Qs in general down 2.5%. Can you imagine, folks? Can you just imagine for a moment a situation where Microsoft would have went down as well today? What are the Qs down if Microsoft had been down 5-10% today? I can tell you what the Qs would have been. Qs would have been down probably 3.5 to 4.5% today, folks. Whew, that would have been fun. I kind of wish Microsoft would have been down because that would have been fun to see like how insane it would have been if this isn't insane enough. My hedges are certainly printing some money today. So Polaris is down big again, 3+%. They just lowered their guidance, so I'm happy about that. Toll Brothers, those hedges are printing money today. Apple's a little bit of money printing today. My Tesla hedge is still going pretty darn well. Chipotle doing decent. We'll see what happens with their earnings are coming up here tomorrow after the bell. We have SDAO, which is, up a bit today, but it's not really the way I really want to get pounded. Like, come on, Dow. Like, I need you to get pounded hard this next couple months. Ooh, pounded hard. Let's see the slaughterhouse. No, let's go in order here. AI stocks here today. AI stocks obliteration across the board. We already spoke about Google. Trade Desk is down over 6% here today. Palantir, I don't think we mentioned Palantir yet. Palantir is down 5.77% right now. Palantir back in the $15 range. Woo! Yeah, only AI-related stock that's up here today is Mr. Softy. Mr. Softy is up. Banking, mixed bag here today in regards to banking. Deutsche Bank is the one green one here today. SoFi's flirting with going back to the sixes, folks. Look at that. SoFi's at $7.16 a share. We already looked at big tech. It's a nasty one. Oh, safety stocks. So a lot of the safety stocks are actually green here today outside of Apple and maybe Costco, Walmart, Monster. But a lot of these safety stocks are a little green, which means there's a little rotation from the Qs today from a lot of the techs over to some of these safety stocks. Kathy Wood watch list is a complete dumpster fire disaster zone here today, as simple as I could possibly put it. Let's see crypto. Crypto holding in there pretty well considering the damage that's going on out there in the market here today. As far as the Dow stocks, Intel is the worst stock of the Dow 30 here today. Intel is down about 5.5%. Disney getting hit. Disney's flirting with going under $80 a share back into the 70s. My e-com watch list. Oh my gosh, Affirm. Oh, it's time to go to the slaughterhouse, folks. The slaughterhouse that is the Fintech watch list. Here we go. Oh boy, here we go. The slaughterhouse. Oh my gosh. Affirm's down 14.5% here today, folks. Affirm 14.5%. Oh my gosh. Square stock's down 8.5%. Upstart's down nearly 6%. Coinbase is down 4.5%. PayPal's down 4.5%. The hood's down over 3%, which, by the way, Bitcoin going up is actually good for the hood, so do keep that in mind. That's good for the hood, no pun intended. Just rhyming. SoFi, we spoke about that one. Rocketing down like it does every single day. Housing stocks watch list. What do we have going on here? Redfin, Redfin's flirting with going under $5 a share. Is flirting with going into penny stock territory, which is a stock defined by the SEC as under $5 a share. Redfin's at 509 right now. They're almost into penny stock territory. Zillow's getting hit hard today, 3% plus move down there. RH getting hit decent. So the housing stocks are all getting hit. They're not getting hit end of the world. It's really tech stocks that are getting hit end of the world here today. Oil and gas stocks, mix a bag here today, folks. Potential hedges, yeah, a lot of Red Dead Redemption out there. Look at the SQQQQ. I already made a move here today, but it's just like, do I want to make another move? And I think I am. I think I am, folks. Yes, indeed. Yes, indeed. And I think I know what I'm gonna buy. I think I know what I'm gonna buy indeed. Damn, there's so many. The problem with these days, folks, okay? The problem with these days is there's so many stocks I want to buy right now. Like, so many stocks. Like, there's probably at least 10 stocks, if not 20 stocks right now I would be happy to buy. Happy to buy. That's the problem when you got this Red Dead Redemption type market, is just this platter. It's like going to a buffet, and it's like, where do I even start with this freaking buffet? Like, I want this, I also want this, I want this, I want this, I want this. And it's like, you know, you only got so much room in your stomach. You can only eat so much damn food, right? And it's like, what do I want to eat at this buffet? Because damn, there's a lot of attractive stuff at this buffet right now. Man, no. Just grabbed some Meta, which usually I don't buy a stock on earnings day. When it's about to go into earnings day, I don't care. Like, if they want to send Meta down, send freaking Meta down. I'll buy more shares. They're probably sending it up, though. So I'll make my move. And there's one more stock I'm going to be buying here today. Yeah, I got to grab a little Shopify here today. I don't have enough Shopify. Shopify is really a stock I need to add over this next several months, if not 6 months. I don't have nearly enough Shopify. If there's one tech stock that I'm really rooting goes down on these earnings, this earnings period, it would be Shopify. So, yeah, I made my move there. And then, is there anything else I want to grab? I think that's probably about enough for the day, right? Okay. All right, alrighty, folks. Alrighty. Let's see what they're talking about here.
It's the leading media company in the world. When you think about the number of subscribers to Netflix, where Netflix has an actual cost to the production of what we watch, versus a YouTube where we have this expected experience of ad. We know about layering AI on top of that, and the cost of the content is at the expense of someone else, and we have hundreds of millions more subscribers to YouTube. This is where I think we are a little hyper-focused on some of the technologies of the past and getting behind ourselves and thinking about where the applications of new technologies will create expansion of business as we know it today, and not just in the sense of going downstream.
All right, we'll leave it there as we approach the bottom of the hour here. Stocks suffering a considerable sell-off today, especially tech.
Yeah.
Nicole, thank you. We'll see you soon.
That's right, Scott.
Joining us here on Closing
That's
Bell.
right.
Next, some under-the-radar stock plays beyond the mega cap space. Well, everybody's been watching that. Our next guest, well, he's been betting on some key names he calls underfollowed and unloved.
Yeah,
He'll tell us what they are next, live from Schwab Impact here in Philadelphia.
To be quite honest, folks, you don't really need a lot of under-the-radar stocks right now. You need some more of that when the market's kind of flying high or just in a very elevated place, and a lot of stocks are overvalued and those sorts of things. That's when you kind of got to find some of those more hidden treasures. I don't think you need to look like, oh, I've never heard of this company before right now. I mean, when you got stocks like Google, McDougal trading at about, let's say, 20 times 2024's expected numbers, I mean, gosh. When you got Shopify under $50, when you got AMD under 100, when you got Amazon trading back down at these prices, Nvidia's even getting really freaking cheap now. Really cheap. Unless Nvidia's business model completely falls to pieces, Nvidia's actually getting cheap now, folks. Okay? And I mean really cheap. By the way, everybody, make sure you're following here if you're not already following. And also, Make sure you're subscribed so Twitch doesn't show you like 10 commercials back to back, because they'll show you a ton of commercials. And if you have Amazon Prime specifically, you get to subscribe to my channel for free, and then Twitch won't show you all those commercials, okay? So do keep that in mind. So NVIDIA is getting cheap now, folks, okay? So this is basically next year. We're trading at, NVIDIA's trading at 26 times. Next year's expected numbers, like, that's getting a little ridiculous. Unless NVIDIA's business model completely falls apart, NVIDIA is actually getting cheap now, which is fascinating. Absolutely fascinating that NVIDIA is getting that spot, right? And so this kind of goes back to the thought process of like, you don't need to necessarily find, the hidden stock that no one's ever heard of this company before right now, because there's just a lot of freaking opportunities everywhere in this market, folks. I mean, everywhere. By the way, am I the only one that bought stocks here today? Or are any of you guys in the chat buying? Anybody in the chat buying here today, folks? Let me know. I'm going to look. And if you are buying today, what did you buy today? I kind of feel like maybe I'm the only person in the stock market. I'm literally the only person in the entire stock market that I think bought today, based upon how Red Dead Redemption this damn market is. If you bought something today, let me know in the chat. I would love to see what you guys are buying, if you're buying. All right, it looks like a lot of you guys buying. Some of you guys, somebody bought Plug, interesting. Somebody bought PayPal, Amazon, PayPal, PayPal. Holy smokes, okay. I guess we got a lot of people buying PayPal out there. Oh my gosh. I think the whole retail community, we're going to own the whole freaking PayPal company. We're going to own PayPal, Venmo, Braintree. We're going to own the whole damn thing. I think by the end of this year, we're going to have probably complete voting power at PayPal. We're going to be able to vote the whole board of directors in. If you guys want to elect me to the board of directors of PayPal, you can do it. Don't do it, please. But no, seriously, like, we might control the whole damn company, the retail community, by the end of this year, based upon the way PayPal's going and how many people are buying that stock. Like, my gosh. Yeah. So somebody asked about like how I buy and what determines how much I buy. So sometimes I'll build up cash position a little bit and get ready to buy, and I buy from cash. Sometimes what I do is usually every single Friday I buy. Every single Friday I buy stocks. I buy a consistent amount. I buy $500 worth of stocks in the public account every Friday. I buy $150 worth of stocks in the Patreon portfolio every Friday. Every Friday. Friday in, Friday out, I'm doing my buys. Now, in terms of these more specialized buys, like buying stocks here today, I bought, a few stocks here today, right? That comes out of like cash pile that I'll build up over a time period where, like let's say the market's getting a little elevated. Like for instance, I wasn't doing a lot of these random buys this summer. And the reason being is we just came off an extremely hot period where a ton of my stocks went up 100% to 200% in a very short amount of time. Look what happened to a lot of my stocks earlier this year. Like, look at a lot of the biggest stocks in the public count, for instance, right? The biggest stocks in the public count are stocks like Meta. So look at Meta. Tesla's the second biggest stock in the public count, right? Meta's the biggest. Tesla's second biggest. Amazon, I believe, is the third biggest. I believe Elf is the fourth biggest stock in the public count, right? So these stocks absolutely were ripping into summer. So what I started doing is I started cashing up. Because I'm like, oh my gosh, like these stocks are rolling right now, and this wasn't as attractive, right? Obviously, a lot of these stocks have started to weaken here recently, and so it gets more attractive out there. And so I start to, deploy a little bit more capital, randomly, like a day like today. Like, you see this sort of action today. I can't sit on the sideline and be like, I'm not going to buy today. Everything's red. Like, these are the sorts of days I love to buy on. These are my favorite days to buy on. I love to buy when everybody's selling. And clearly, it seems like everybody's selling today, except you guys. Shout out to the chat. You guys are out there buying stocks here today, right? This is the type of stuff I love. I don't love to buy. Let's say the market was reversed. Let's say today, we're in a high-flying market. Let's say Google's up 9%, Shopify's up 7%, AMD's up 5.5%, Snowflake's up 5%. That's not the sort of day I want to buy. No, short-term trader, somebody that's trying to play the market for a swing, somebody that's trying to play for the next few days, next few weeks, next few months, they might look at that pricing action and say, hell yeah, like I'm buying today, right? Because they're playing momentum. And they're like, the market has momentum, blah, blah, blah. A day like today, a lot of traders are going to look at that and say, I don't want any freaking piece of this. And that's the difference between an investor and a trader, right? As investors, we look out there and we say, this stock's trading at this price, this stock's trading at this price. We believe it's going to this price over the next 4 years, 5 years, whatever, right? 3 years. we're making moves. We see Red Dead Redemption and we say buy, buy, buy. A trader looks at that and they say this market has no momentum. Why would I want to play anything right now? I'll play it when these stocks start bouncing back, when they hit certain technical levels and things like that. So that's just a different mindset between the trader community and the investor community, right? So just something that's always important to kind of keep in mind there. Oh boy, it's going to be a wild one, folks. It's going to be a wild one. By the way, we are going to, on this live stream, just so you know, we're not only going to watch Meta's earnings and react to that here after the bell, but we're also going to listen to the conference call, the entire conference call live here on Twitch here today. And I'm going to give you my analysis of the conference call as it goes along. Being that this is my biggest stock, I got to do it. And then also tomorrow, just so you know, obviously we got crazy amount of earnings coming tomorrow. Enphase, Amazon, Intel, Chipotle, and many other companies. But I will be doing the entire conference call of Amazon tomorrow as well. So we got Meta today is the main focus. Tomorrow, Amazon's the main focus, okay? So do keep that in mind, folks. So this is a perfect example of this market we're dealing with here, folks. And what I mean by that is, you know, yesterday was a great day for the small caps. And look at today for the small caps. You know, look at Fubo today. Look at Avant today. Avant reported such good earnings, and yet, the stock can't do anything right now. Look at Honest today. Those stocks were booming yesterday. Yesterday, those stocks were up like, 7%? And today, they're just getting killed. And so this market has no damn conviction in whether it's going to go down or up. That's the problem we have in this market right now is it's like one day, oh, wow, really good day, bad day. Good day, bad day. And nothing's really happening. And so the market's convictionless because there's a divided market right now between people that think rates have topped in terms of, like, if you look at treasuries, people that think like this is we've topped now, and you got other people that are saying we haven't topped and we got higher to go in regards to these, right? And so that's creating this divergence of a market where one day everybody feels like, oh, rates have topped, risk on, small caps, growth stocks roll. Next day people are like, no, I don't think so. So then you have the dynamics of people, the recession, no recession, things like that, and all those sorts of fears. So man, it's a situation. By the way, we got a hype train alert. So, wait, what happened to Google? Oh, those are my current stocks. Okay. I was like, wait, what happened here? I've had it on the big tech watch list so far. Let's see the slaughterhouse, how the slaughterhouse is doing. Oh, man, just rough. Now, if you don't know my opinion on the slaughterhouse of fintech stocks, my belief is all of those stocks, all of them, will actually bottom this quarter we're in right now. That is my belief, and that is regardless of what happens with rates. That's regardless of recession, no recession. That's regardless of anything. I personally believe, and I could be wrong about that, but I do believe all those stocks will bottom this quarter we're in right now. I believe everybody that's going to have wanted to sell those stocks is going to have sold those stocks by the end of this quarter, which this quarter ends, by the way, December 31st. And so that's what I believe. I believe everybody that will have wanted to tax loss harvest will all tax loss harvest. And so, that's kind of my belief in regards to those fintechs. I don't know. We'll see what happens, obviously. And I'm not crazy enough to play some short-term, 1 month options, 3 month options on those, but that's what I believe. I believe they're all in a bottoming out process right now, and then we'll start to strengthen significantly in 24 regardless of the climate. That's my belief. I could be wrong about that, but that's kind of what I'm thinking. So we'll see. We'll see how it all plays out. We'll see how it all shakes out. But yeah, those stocks have just been absolutely brutalized, all of them. And they're not all equal. That's the thing. Like an Affirm is very different than a PayPal, right? A PayPal is very different than a Robinhood. They've all went to the slaughterhouse, and I just don't think they all deserve to go to the slaughterhouse, just to be honest. But this is what Wall Street does many times. If Wall Street just hates an entire space, they will sell those stocks off regardless of really what's going on with those business models. Because you look at some of those stocks, and some of those stocks are huge money losers. Some of those stocks are huge money makers. Some of those stocks are one-trick ponies. Some of those stocks have incredible business lines in several different fronts. They're not all equal. I can tell you that, okay? These companies are not all equal. And yet they've all gone to the slaughterhouse. So let's see, Affirm. I just want to bring them all up on the watch list together at one time. We'll bring up Square. We'll bring up Hood. By the way, thank you everybody that's joining me for the first time. Also, thank you everybody that joins me all the time on here. Make sure you're following If you haven't already hit the follow button, what other stock do I want to have on here? I don't know, maybe Rocket. Did I already add Square? I already added Square. I got PayPal on there. I'll add SoFi. I'll add Upstart as well. I just want to see all these stocks together on a chart. And then Upstart. These companies are not equal. I can tell you that in terms of their business models. They are not. All right. I got SoFi, Upstart. That was it. Oh, and Coinbase. Even a Coinbase is so much different than a Rocket, right? But yet these stocks have all just gone on the slaughterhouse here recently. So this is kind of year to date for these stocks, right? Coin obviously has had a tremendous year, but it's really starting to show some weakness recently, and that's even with the whole situation of we have Bitcoin doing really well right now, right? Bitcoin's doing tremendous. Like, it's almost shocking, right? And yet look at a 3-month for all these stocks. They've all just gone wrecked, okay? Affirm surprisingly is only down 5%, which is down 15.5% today. Coinbase down 22% in the past 3 months, folks. SoFi's down nearly 25% in the past 3 months. I mean, Hood's down nearly 30% in the past 3 months. PayPal's down 30% in the past 3 months. Rocket down over 30% in the past 3 months. Square's down a shocking 46% in the past 3 months. And Upstart is down 61% in the past 3 months. They've all just gotten taken out to the slaughterhouse. And once again, I don't feel all those companies are created equal. And I don't feel, oh, look at this guy. Oh, could you imagine trying to tackle that dude? Oh, dang, man. Woo! You want to talk about a real man sport? Rugby. Those guys are wild, man. Wild. That's a real man sport. Woo! That's no joke. Those are big boys. Probably pushing 220, 230. Built solid like that, running at you full speed. No pads, no helmet, no nothing. Some people make an argument that rugby is actually safer than a traditional football that we play here in the States. Some people make an argument that the pads and the helmets and everything actually make it more unsafe versus if you actually went padless. So I don't know. That's just an opinion I heard out there. I can't tell you because I played tackle football for 5 years, but I never played rugby, so I can't tell you what's safer. But it just seems like rugby's scarier, I think, because you don't have the pads and the helmet. But it could actually be the pads and the helmet actually make it more unsafe. So let's see here. PayPal missed out on Meta. Here's your second chance. A lot of people have a very similar opinion of Meta as I do, right? That this is Meta 2.0. And the good news is we will know by this time next year if that was accurate, right? We will know by this time next year, was PayPal another Meta type opportunity? Now, by the way, I do not expect PayPal to necessarily go up as much as Meta went up this year. I expect PayPal to go up significantly, but I'm not quite expecting as big of a run as maybe we saw with Meta. But we'll know by this time next year if that was that sort of opportunity. I believe it is. But time's got to tell, right? Time's got to tell. We got to see the numbers come in over this next many quarters. So, but it's interesting. There's a lot of people that have an opinion very similar to mine on PayPal. PayPal's attracted a lot of investors here over the last several months, and I believe the reason being, folks, is you have a perfect combo in regards to PayPal of people that are growth investors and also people that are value investors. Very interested in PayPal stock, right? Because you're talking about it's a growth company. Look at their numbers. Look at their latest quarterly results. That revenue was up about, 8% or so. The bottom line was up 20+%. So that's growth numbers. I mean, you're talking about you're growing your bottom line 20+%. You're a growth company. But it's trading at value valuations. So that's the beautiful thing with that's happened here with PayPal, which is very similar to Meta last year. Meta's a growth company that last year got down to a forward P like this. Meta's forward P got down to like 10, 12 range last year. And so we're seeing a very similar phenomenon now with PayPal, where you got value investors buying this stock, you have growth investors buying this stock, and they're saying, I'll take my risk. The risk reward's there, right? That's what they're saying. And obviously I have growth value dividends, right? That's my strategy, GVD. And PayPal just represents such a phenomenal growth opportunity and value opportunity at the same time, right? So we'll see how it all shakes out, but I believe I'll be looking very, very good on the stock over the next 12 to 24 months. Doesn't mean it can't go lower in the short term. We got, this whole situation here, right? Let's see what they're talking about. Oh, equal weight.
40. It doesn't really pull back at all, and it took it all at once. And now it's at 125. There's no real shame in that to be at that level. But obviously, people were complacent about what those numbers were going to be.
Amazon hasn't gotten talked about a lot today, as it reports tomorrow, of course, so everything else is taking the air out of the room. Down 5.5%.
Yeah.
Going into that number, it just catches your attention. And when you look at why is discretionary so weak today, well, Tesla's been weak, trading awful, and then Amazon too.
And it's interesting that that was the market's interpretation maybe of the Google Cloud shortfall, which was to say not Google ceding market share to everybody else, but just that Mike.
By the way, shout out to everybody in the chat that's watching this live stream at work. I know some of you guys are working right now, so shout out to you guys that are watching this at work. Appreciate you guys. And by the way, we might hit a new record high amount of people on this live stream. The old record is just over 600, and that was on the Tesla live stream. I think we might break that record, folks. I mean, we're already pushing close to 500 people here. There's a potential that we could break the Tesla record here today, folks. This could be a record breaker.
IBM earnings in overtime. What do we expect?
Yeah, well, Wall Street pretty much lacks a clear consensus when it comes to IBM. All analysts agree that the surging U.S. dollar is going to add incremental headwind to revenues in Q3 and this current quarter, a problem we also saw last quarter. But they can't seem to agree on the growth trajectory for IBM's software and consulting business. Both of those two businesses contribute roughly 75% of total revenues. Bernstein says IBM should see extra revenue from Apptio, a software firm that helps managers or businesses manage IT spends. IBM acquired it in early August, so that's going to be a positive for software. But UBS points out that another software division, Red Hat, is expected to decelerate 10%.
Somebody asked if I've been using the Quest 3. I have used it several times now, and it's pretty cool tech. The ability to see through the headset, I guess we can say, is the pass-through is pretty amazing. I mean, it's crazy how much progress they made versus a Quest 2, and your ability to be able to see in front of you, even with the headset on. It's pretty insane, folks, and the level of detail around that is pretty shocking. And so I can only imagine where that technology is going to be in 5 years from now. I will say Meta, they're spending a fortune on all that stuff, but based upon some of the improvements I'm seeing, I can see why they're spending a lot of money, because some of these improvements are pretty insane. And the fact that they're selling at these sorts of price points, I'm like, this is insane technology for the price point of the Quest 3, $500. It's pretty sick.
Meta, I'm wondering how many times we are going to hear efficiency out of Mark Zuckerberg, because that's been a winning strategy for him in that stock, hasn't it?
It has indeed. Now, we do have to note Meta shares are down about 4% today going into the close, but the stock is still up nearly 150% in the past 12 months. And this is because analysts and investors expect the company to accelerate its revenue growth, projecting Meta's revenue growth rate will reach 21% in the third quarter, up from 11% in Q2. And this would be its fastest rate in 2 years if it hits that expectation. Now, Meta is expected to benefit from AI, improving ad creation, targeting, and measurement, better monetization of Reels, tapping into the opportunity to use Messenger and WhatsApp to drive ad revenue, plus an overall stabilizing and now growing ad market. So we're going to have to see what Meta says about its expenses. And yes, this self-proclaimed year of efficiency. Plus, we'll be listening for more about costs around its Reality Labs division with a new headset out this fall. Scott, despite Meta's gains, analysts are still very bullish. 86% have a buy and 10% have a hold.
Let's see where we wake up tomorrow, though. The 10-year right now at 4.
Alrighty, folks, here we go. Market's closing.
As you know, a lot of the action, too, to see what happens
GDP, yeah.
for the curve. Right, GDP out, so there's a lot to consider.
We lost so much money. Woo-hoo!
That is for certain, especially if you're invested in those mega cap tech names. NASDAQ just going out with a near 2.5% decline. Does it for us. See it back home tomorrow.
Yes.
Send it into OT
yes,
now.
we lost so much money. Oh, boy, folks, here we go. Here we flip the flapjack and go.
Closing below its key 4,200 level. First time we've seen that since May as mega tech tumbled. That's the scorecard on Wall Street, but the action is just getting started. Welcome to Closing Bell Overtime. I'm Morgan Brennan with John Fort. Meta and IBM headlining another huge
Woo!
quarter of
Everybody, get in your guesses. How much was the public count up or down today? We got to get those numbers in.
Tech
We're about to play our game.
slammed.
How
Let's
much was the
get right
public
to it.
count up or
Joining us now
down?
is
Let me know in the
Chief
chat.
Private Wealth at
We'll see
CIO
who's the
and CNBC
closest.
contributor
Here we go,
Victoria
folks. What's the number?
And Victoria, I want to start with this sell-off that we have seen. We just talked about.
All right, you guys ready? I'm going to throw it up on the screen. Here it goes. Everybody getting your guesses. Here it goes.
Higher rates are going to destabilize the economy enough that we're going to undercut the soft landing. I think that's the entire feedback loop that we're dealing with right now does raise the bar for earnings. That being said, a lot of the numbers that are beating are not really beating based on what we expected to see 3 months ago. And I'd also say you wait for about halfway through earnings season, see where we are in terms of S&P consensus. The buyback window opens up, and then you find out.
You look at CRPO, that's a pipeline measure, 2.5 points over guidance. Operating margin, also 2.5 points over guidance. Free cash flow, 300 basis points over year. Now, Bill said the number for remaining performance obligations, that CRPO, would have been higher, except ServiceNow had its biggest ever federal quarter.
Folks, Meta's going to report any second. Here's the numbers we need to see Meta beat. We need to see them beat 365 EPS, okay? 365. Somebody's got 506 as a high number. That's insane. So we got to see a beat on 365, and we got to see a beat on 33.4 million. Remember those two numbers, 33.4 million, or 33.4 million, 33.4 billion in $3.65 EPS. That's what we need to see a beat on for Meta here, folks.
Meta results are out. We are going
Meta.
down. The stock's initial move is
And it's
down
not even on the website.
Yeah. Mike, just to go back to you, I mean,
What's going on
it's
here?
been a mixed bag, I would say, in terms of earnings, and we're even seeing it here. And we're going to go to Julia Borson because we do have those Meta results.
Meta,
ready
here we
to
go, folks.
Julia.
Here we go.
Meta beating on the top and bottom line.
Let's fucking go!
Earnings of $4.39.
Oh!
Estimates of
yeah!
63 cents per
Oh, yeah!
also coming in higher than expected at 34.1
What a
billion
beat!
versus the 33.5
What a
billion
beat!
that was estimated by analysts.
Oh, and they beat on revenue,
Continuing
too.
to dig in through the
That was a
results
harder
here.
number.
I just want to point out that the company is lowering its 2023 total expense outlook,
That's
lowering the
even good news.
range to 87 to 89 billion from the prior range of 88 to 91 billion. They're giving 2024 total expense outlook in a range of 94 to 99 billion. Many analysts in the street were saying anything over 100 billion would be too high, but below that, now in that 94 to 99 billion range. I just want to point out that operating margin of 40% is ahead of the estimate. The consensus estimate was 34%. We see shares are now up 4.8%. And one last bit here, the company says they expect fourth quarter 2023 total revenue to be in the range of 36.5 to 40 billion. So just giving that guidance there into the fourth quarter. Back over to you.
All right, Julia, we know you'll continue to look through that for us, and I suspect we'll hear from you again. For now, though, let's get a reaction from a shareholder joining us now, EMJ Capital founder Eric Jackson. Eric, it was an initial move down, but it was very short. Now it's higher after hours. Should we pay more attention to the top line here, or the fact that Zuckerberg and co seem to be keeping a rein, at least somewhat, on expenses, that they're projecting, what, I think it was 94
It doesn't get better
to
than
99 billion
That's
for
it.
full year 2024.
That's
they have
it.
a history of reining that in when they need to.
That's it.
Yeah, I think that was the biggest surprise, John, of what Julia just said, is that was much less than I think what the street was expecting from the expense side. That means that next year's profits have to go up, just like they did this year as they started to kind of pull that back. So I think that was the most important thing. Obviously, they're the king of digital advertising. We had some hints last night with the Snap results and with Google's results, as you pointed out, with YouTube and their core business, that the ad market is reasonably healthy. And we saw a greater beat on the top line here, but it's that operating expenses that I think is going to get investors most excited.
This stock should be up 20% tomorrow. 20%. I don't know if it will be, but I'm just saying it should be. Based upon everything that just transpired here, bringing down expenses, the crazy EPS beat, it should be up 20% tomorrow, minimum.
Now, coming out strong. We had Microsoft before. And if you were concerned about the ad market, these Meta results should give you perhaps a little solace, no?
Yeah, it's not at all clear. Obviously, Tesla's commentary, I think, spooked the market, a week ago. So you have to take each of these events as a sort of a case-by-case basis. But yeah, I think Google Cloud, is a special case in dealing with Google. Obviously, we didn't see the same results from the Microsoft Azure results. So I think looking at a number of these earnings reports so far, there's more good than bad for sure. And then the ad market, I think, is coming back. Remember, the digital ad market was really, one of the first to kind of go into the tank. It wasn't just the Apple changes. It was, a lot of people just started pulling back on ads.
All right, folks, look at these numbers. They got it on the Meta IR site now, okay? This is sick, absolutely sickening. 23% revenue growth. Whoever said Meta was dead last year, dead wrong. 23% freaking revenue growth. Are you kidding me? Meanwhile, they brought down costs and expenses by 7%. That almost is unheard of. You don't almost ever see a company, I can't remember last time I saw a company growing their top line 20% plus and brought down expenses, folks. Income from operations, I told people it was going to be shocking. 143% income from operations growth year over year. I told people it was going to be shocking. I told people it was going to be shocking numbers, okay? 164% growth in net income. 168% growth in diluted EPS on a year-over-year basis. It doesn't get better than that. This is beyond an A+. This is 100%. This is Meta got 100% on their test. Are you freaking kidding me? Oh my gosh. What an insane number. Their guidance came in line basically with the street, kind of what the street was expecting. They're going to keep expenses in check in a major way. Previously they were thinking they're going to spend $88 to $91 billion. Now they're talking about 87 to 89. Holy smokes. This stock should be up 20% tomorrow. Will it be up 20% in this market? I'm not so convinced of that. Should it be up 20% tomorrow? Minimum. Minimum. It should be up 20% tomorrow. Will it be up 20%? Probably not. Should it be up minimum 20% tomorrow? Yes. Yes. You got to be kidding me. With this valuation on the stock, it should be a 25% move tomorrow. But like I said, this is such a kind of crap market we're in here in the short term. This is ridiculous, folks. Look at the revenue. R&D, they actually went up $500 million on R&D. So spending more on R&D, and yet they still kept expenses in check the way they did, right? Look at this, marketing and sales, that's what they brought down massively. In this same quarter last year, marketing and sales was nearly $3.8 billion versus this quarter they just reported $2.8. Look at general administrative. They brought that down from 3.3 to 2. Oh my gosh. On a basic basis, 450 EPS. Look at the shocking number. Diluted EPS, 439, folks. 439 versus $1.64. I cannot wait to listen to this conference call. I will be listening to this conference call live on here. Oh my gosh. Woo! Oh, look at the balance sheet. They're up to $37 billion. They're up to almost $37 billion in cash and cash equivalents. Marketable securities up to $24 billion. We're talking about they got $60 billion plus now in cash and marketable securities, folks. Total assets, $216 billion versus total liabilities of only $73 billion. Oh my gosh. Total stockholder equity, $142 billion in stockholder equity, which is an insane number considering how small Meta's market cap is, folks. This is ridiculous. This should be a 20% plus mover tomorrow. Like I said, we're at a crap time in the market. It is what it is, but this should be a 20% plus move tomorrow. Incredible numbers from Meta.
But if you look at what they just came out with their conference and what they talked about with their virtual reality and AI and how they're blending it all together, as well as their new partnerships with Ray-Ban and others.
Thank you, everybody that said congrats. I appreciate y'all. And congrats to any Meta shareholders. Regardless of what happens with the stock, whether it's up 4% tomorrow or not up or up 10% or up 20%, whatever the situation is, just understand the numbers, the financials, the actual business is ridiculous right now. And they're just executing about as well as any public company in the world right now. So congrats to anybody that owns that stock overall. I mean, my gosh, is that a ridiculous numbers.
I think they've been a big beneficiary from some of the issues over at X.
They've set that company up so well now that even if you go into recession, they're set up so well because they're running the business so lean. That's a beautiful part. So if the economy's great, great. If the economy's bad, like they've leaned out the organization in such a phenomenal way that they should be able to put up ridiculous numbers regardless of the economy.
Including the increasing legal and regulatory headwinds in the EU and the U.S. that could significantly impact our business and our financial results. They say the Federal Trade Commission is seeking to substantially modify our existing consent order and impose additional restrictions on our ability to operate. We are contesting this matter, but if we are unsuccessful, it would have an adverse impact on our business. And then one more thing here, John.
The government's trying to screw all these big tech companies right now, all of them.
We were just talking about that. They say for Reality Labs, we expect operating losses to increase meaningfully year over year due to our ongoing product development efforts in the augmented reality, virtual reality space. Back over to you.
All right, there you go. Julia Boorstin, thank you. And our thanks to Victoria Green and Eric Jackson and our own Mike Santoli, who we'll be seeing later this hour. I mean, this is we're still in the first block of the show right now.
We are a lot of tech higher. IBM up 1.5%, Meta and ServiceNow both up 4+. Mattel now down 6.5%. Wonder what that's about.
Yeah, we're gonna have to. We'll continue to.
It's a crap market we're in. Those Mattel numbers look freaking pretty dang good as well. Just to be honest.
Over time.
Meta should be up easily 10% to 15% right now, but we're in a very crap market, so it is what it is. But so they're talking about increasing the spend in regards to Reality Labs. They can do it. They're putting up these sorts of numbers. You can do it, right? Last year, it was like, I don't know if they can do it because we saw what was going on with their revenues last year. We saw that they were way bloated as a company, right? And it was a big concern. When you just come in and kill your EPS numbers, you got the money to spend to make sure you're going to win when it comes to VR and AR, and they want to win, and it looks like it looks like if we're going to judge this off the next 5 years, it looks like it's going to be Meta versus Apple. That's what it looks like, right? And Meta wants to win, and this is going to be a huge market. I cannot wait to get in this conference call, folks. I'm looking so forward to the conference call. This is going to be good stuff. Good stuff. I'm going to be reacting to this conference call live here. Woo! Oh man. Man, this is good stuff. So let's see. Family daily active people came in at 3.14 billion. Let's look at the slides. Usually Meta puts out slides here. Let's see if we've got slides for Meta yet. We should have slides. Meta usually puts out a nice slide deck. No slide deck? Wow. Well, it is what it is. Family daily active people, 3.14 billion daily active people on average in September. That's a 7% increase. Meta's one of these companies that you're like, dude, there's no way they can keep growing the amount of users on their platform. It seems like everybody in the world either uses Facebook, Instagram, or WhatsApp, right? And yet still they grow and they grow. Monthly active people, nearly 4 billion monthly active people on their apps now, folks. 3.96 billion, an increase of 7% year over year. Facebook daily active people, right? 2.09 billion people. Daily active. That's an increase of 5%. People have been calling for the death of Facebook literally since the company went public back in the day. Back in 2012? People are saying, oh, Facebook's the next MySpace. And yet they just keep growing and they just keep growing. Incredible. Facebook monthly active users, 3.05 billion. That's incredible. Ad impressions per price per ad in the third quarter of 2023, the ad impressions delivered across our family of apps increased 31% year over year, and the average price paid per ad decreased 6%. Folks, this is insane. The price per ad was down 6% year over year. Imagine when price per ad starts to increase again, which it's not going to go down forever, okay? And it will start to increase again eventually, and then start to increase rapidly. And so imagine what Meta's revenue numbers and EPS numbers will be looking like when their price per ad starts to increase again instead of decrease. Can you imagine what the numbers are going to look like then? Holy smokes. So if there's something exciting over this next several years, it's the fact that likely average price per ad will eventually start going up, folks, okay? Costs and expenses, total costs and expenses were $20.4 billion, a decrease of 7% year over year. CapEx, capital expenditures, including principal payments on finance leases, was $6.76 billion for the quarter. Share repurchases, they repurchased almost $4 billion worth of stock, $3.7 billion. As of September 30th, they have $37.2 billion available for authorized share repurchases. So I will say, if you're a Meta long like myself, we should actually be rooting for Meta stock to be lower here in the short term. That's what we should be rooting for, because this is a situation here, folks, where you'd want the company to buy back as many shares as possible. Like what's going on with PayPal right now. The great news for PayPal, the stock's so low, PayPal's got a big buyback on. They should be able to pick up crazy amount of shares over this next few months for very low prices. Cash and cash equivalents and marketable securities, $61.2 billion, $61.12 billion. Free cash flow was $13.64 billion for the third quarter. Long-term debt, $18.3 billion, so they could pay that off tomorrow without no problem. Headcount was 66,185, a decrease of 24% year over year. A substantial majority of the employees impacted by layoffs are no longer included in our reported headcount, September 30th, 2023. Wow, folks. Incredible. Absolutely incredible. The stock's not doing crap, but I'm just telling you, because we're in a crap market right now, if this market was decent, I mean, the move, if we were just in a decent market right now, it'd be absolutely incredible for Meta. Yeah, we'll see what happens in this conference call. I think a lot of people are waiting on this conference call too, but those numbers are shockingly great. I mean, the bottom line is the financials are on fire for this company, and they're set up so well. So important. They're set up so well. Like, what's next quarter going to be for EPS? If they just came through and reported the number they reported, $4 plus, right? What are we looking at for next quarter? $5 plus? $6? That's a big question, right? Analysts are at 488. Analysts are going to have to start bringing up their numbers because they're way off. They're way too low with their EPS estimates. They just got pretty much embarrassed by Meta, with what the number Meta put up, right? So analysts are likely going to have to bring up numbers for next quarter. They're likely going to have to upgrade the stock, and it's going to go through an upgrade cycle. So I hope the stock goes down because this company's well positioned whether the economy's good, bad, recession, no recession. I can't wait for this freaking conference call. Man, is that a good setup, folks. Wow. Absolutely incredible. So, chat. Are you guys happy with Meta earnings? Are you displeased with Meta earnings? What do you think about the stock price move after hours? We got a minute to spend with the chat here. Somebody said, oh, that's a good, interesting question. Can I derive anything from Meta's earnings for Amazon tomorrow? Yes, I can. Based upon not only Meta's earnings and revenue numbers, but also Google, I believe Amazon earnings, I'm even more confident that Amazon's going to smash it tomorrow as well. Even more confident. Let's see. Meta's advertising business had 50% plus operating margin this quarter. That's a sick number. Meta didn't, let's see, holy smokes, things going too fast. Meta didn't even recover today's loss. This is really a bounce. Yeah, the stock should be up 20% tomorrow. That's all I'll say about that. But there's always a divergence between what the market should do versus what the market will do, right? So my hope is I get to buy some shares tomorrow, actually. I mean, these numbers are incredible out of Meta. I mean, you can make an argument that Meta's cheaper today at $300 a share than it was last year at $100 a share. And how do you make that argument? You make that argument by basically seeing the progress that's made in the business model, where Meta's EPS is now versus where it was last year, where the revenues are at now, where the business model is at now. Absolutely incredible. By the way, Tesla is reportedly spending $250 million on LiDAR factories in China. Yes, from what I heard is in China specifically with all of those EV companies over there, I heard they are using a combo of LiDAR plus other technologies and is widely adopted in China from what I heard here recently. Enphase expectations tomorrow. Somebody's 36% underwater. Woo! I mean, Enphase is in a tough position with their business model here in the short term, folks. Very tough position. By the way, I want to get this meta call ready to rock and roll here, and I'll jump back in here. But I just want to get this up and rolling. I get lonely too. Oh, there's the slides. So if we look at advertising revenue by user geography, let's check. I like to look at Q3 versus Q3. So nearly $15 billion in US and Canada. That's versus 12.7 in the same quarter last year. Wow. Wow. Very nice number out of Europe as well. 7.7 versus 5.7. So about $2 billion up year over year from the European region. That's incredible. Asia Pacific grew over $1 billion year over year. And rest of the world grew over $1 billion as well. Wow. Wow. Very impressive. Impressive numbers, folks. Wow. Okay, let's see segment results. Their advertising business on fire. Reality Labs revenue, $210 million. You should see that Reality Labs revenue number jump substantially in Q4. And the reason being is because of Quest 3. So we should see Reality Labs revenue go wild. Operating margins, look at the operating margins, folks. 40%. 40% operating margins. Incredible. If we compare that to this time last year, 20%, folks. So literally, Meta went and doubled their operating margin on a year-over-year basis. Who else is doing that? Seriously, who else is doing that? Nobody. Nobody's doubling their operating margins on a year-over-year basis. Like, that's ridiculous. That's crazy, crazy. Crazy, crazy. Look at their expenses as a percent of revenue and how much it's dropping, folks. Oh, I can't wait for next quarter. I'm already looking forward to next quarter's numbers from Meta. I'm already looking forward to it because I see these expenses and the way they're headed, and we're about to go into holiday shopping season, folks. Like, you know, Meta's revenues boom in the holiday season. Oh my gosh. I'm already looking forward to 3 months from now. Can you imagine what the numbers are going to be? Can you flip and flapjack and imagine? But every single category dropped significantly for Meta. Incredible. Tax rate, 17%. Net income, look at the net income, folks. From this same quarter last year, they did $4.3 billion of net income. Now they did 11.5. And look at the trend, right? The trend is your friend. Oh, conference call, 2 minutes away. 2 minutes away from conference call, folks. Make sure you're subscribed. Get subscribed. Otherwise, Twitch is going to show you a bunch of ads during the conference call. You're going to miss important parts. If you got Amazon Prime, you get a free subscription. Look at this. 4.3, then 4.6, 5.7, 7.7, 11.5. What's next quarter going to be, folks? 14 billion? 16 billion? 18 billion? Like, we'll see where net income comes in next quarter. But it's going to likely be a lot bigger net income number than this quarter, right? So can you imagine what the numbers are going to be looking like? That trend is our friend. Look at diluted EPS. $1.64, then $1.76, then $2.20, $2.98, $4.39. We could be looking at $5 to $6, $5 to $6 range for diluted EPS for the Christmas quarter. My gosh, maybe better than that. I don't know. I don't want to get too excited, but probably $5 to $6 range. Holy smokers, that's no jokers. CapEx going down for the company. A lot of people want to see that. Family daily active people going up for the company. My gosh. The numbers are phenomenal.
Good afternoon. My name is Dave, and I will be your conference operator today. At this time, I would like to welcome everyone to the Meta third quarter earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question, please press 1, then the number 4 on your telephone keypad. This call will be recorded. Thank you very much. Ken Durrell, Meta's Director of Investor Relations, you may begin.
Thank you. Good afternoon, and welcome to Meta Platforms' third quarter 2023 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's press release and in our quarterly report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The press release and an accompanying investor presentation are available on our website at investor.fb.com. And now, I'd like to turn the call over to Mark.
All right, thanks, Ken. Thanks, everyone, for joining today. This was a good quarter for our community and our business. We estimate that there are now more than 3.9 billion people who use at least one of our apps every month. The big product news this quarter is that we just held our annual Connect conference, and we discussed Quest 3, which is the first mainstream mixed reality device, and the next generation of Ray-Ban Meta smart glasses, which are the first smart glasses with our Meta AI built in. There continues to be a ton of innovation in AI, and we used Connect to describe and start launching a lot of the new consumer AI experiences that we expect to become meaningful parts of all of our apps and our business over the coming years. We started rolling out Meta AI, our new assistant that you can access across all our messaging experiences and smart glasses to answer questions, get access to real-time information, and generate photorealistic images. We started launching our AI Studio platform that enables people to create and interact with lots of different AIs for help getting things done and just having fun. We rolled out Emu, our image creation model that produces high-quality images and stickers fast. We launched an early alpha of business AIs so that eventually every business can have an AI to interface with customers to do sales and support. And we laid out the plan to launch creator AIs next year, so every creator can have an AI that their fans can engage with to help them build out their community. And that's just a snapshot of some of the AI work that we're doing. The experiences that we started rolling out at Connect are going to transform the way that people use all our services: feeds, messaging, hardware, advertising, business messaging, interacting with creators, and more. But it's going to take time to tune all of these experiences before hundreds of millions or billions of people are going to use them. And I expect that dialing in these products and the vision that we articulated at Connect is going to be our theme for much of the next year. And I think that it's going to be a very exciting 2024. As we are looking ahead and planning for next year, I wanted to share a few thoughts on what I'm expecting. I've been happy with our results this year so far, and we are planning to continue focusing on operating efficiently going forward, both because it creates a more disciplined and lean culture, and also because it provides stability to see our long-term initiatives through in a very volatile world. Now, in terms of investment priorities, AI will be our biggest investment area in 2024, both in engineering and compute resources. Okay. But I want to avoid allocating a lot of new headcount. So we're going to continue deprioritizing a number of non-AI projects across the company to shift people towards working on AI instead. On the recruiting front, one dynamic that I want to flag is that we have a sizable hiring backlog right now, since part of our layoffs earlier this year included teams swapping out certain skill sets for being able to hire others. And we're still going to be hiring those roles into 2024. So that means that even though we're planning to grow headcount at a much slower rate going forward, the actual rate next year may temporarily be faster as we work through this hiring backlog. All right, now let's get into our product updates. Let's start with Reels, which continues to do very well. We estimate that with all the ranking and product improvements that we've made, Reels has now driven more than 40% increase in time spent on Instagram since launch. We also reached a monetization milestone earlier than expected, and we estimate that Reels is now net neutral to overall company ad revenue. In many ways, Reels has now graduated from being an early initiative to now being a core part of our apps. So going forward, we're going to continue focusing on Reels, but we'll also look at growing it as part of our overall portfolio of video services, which make up more than half of the time that is spent on Facebook and Instagram. And there's a lot more to do across all of these.
All right, so first off, what do I think about the conference call? What do I think about the conference call? What do I think about the stock price reaction? I'll answer those two questions. And then before we sign off today, Enphase is reporting tomorrow, so I want to play you guys an interesting clip, kind of debate between these two gentlemen in regards to Enphase stock that I thought would be interesting before I sign off here today. So first off, what did I think about that conference call? I thought the conference call was good overall. I don't think there was anything, I don't think there was anything shockingly great or bad about that conference call. I think everything was in the numbers, right? The numbers were what was really, really impressive in regards to Meta overall, right? What do I think about the stock price reaction, right? $295, we'll see where we trade at tomorrow. Maybe it's a down slightly day, maybe it's an up slightly day, maybe it's a break-even day, right? But it looks like the move is going to be a sleepy move tomorrow. Regardless if we go down a little bit, break even, or up a little bit, it doesn't look like the stock's going to make a huge move tomorrow, right? What's scary about that is how insane the numbers were Meta just posted, right? I mean, it was just phenomenal. They killed it. I mean, the EPS was shocking, right? What's scary about that is imagine if Meta didn't kill it. Imagine for just a moment, folks. Imagine for just a moment if Meta had just came in and met numbers. I'm not talking about missed numbers. Imagine they came in and just reported what analysts were expecting. Can you imagine how much Meta would be down after hours right now? Meta would be down 15 to 20% after hours if they probably came in and met numbers. If they missed numbers, folks, we could be looking at a stock down 25% after hours if they came in and missed numbers. So they had to come in and kill it. That speaks volumes about the state of the market we're in right now, right? We looked at Google's earnings last night. Google McDougal reported an A-plus quarter. An A-plus quarter. And the stock was down almost 10 percentage points today, right? Meta comes in and reports even a better quarter than Google. That's a 100% perfect score. And yet, that stock, we don't even know if we'll get gains tomorrow, right? That speaks volumes about the state of the market we're in. Especially when you look at where Google's valuation is, which is very low, and you look at Meta's valuation, which is even lower. That speaks volumes about the weakness in the market. This market is extremely weak right now. One of the weakest markets I've seen since last year, honestly. And before that, I hadn't really seen markets this weak. When you got companies coming in and killing it, and their stocks can't even go up, you know you're in a extremely weak market. Even you look at Mattel, right? Look at Mattel. Mattel reported really good numbers. Mattel stock was down, 7%? Let's look at Mattel. Let's see how much Mattel's down after hours. Mattel reported banger quarter, man. Banger quarter. And yet, Mattel stock down almost 7% after hours. Look at Align Technologies. Align Technologies is a perfect example of they didn't report a very good quarter, right? And, Align Technologies, is down 20+% after hours. Look at Align. Align reported a so-so quarter. This is what you get if you report in this market right now, folks. Oh, I'm sorry, I'm not showing you guys the screen. I do apologize for that. This is what you get in this market, folks. You come in, you don't come through with sick numbers, you go down 23% after hours. You come in with the most insane quarter, like Meta just came in with, and the stock can't even get gains after hours. We're in a very weak market. You come in with really good numbers like Mattel just did, down 7%, And remember, these stocks are trading at low forward Ps. It's not like Alliance trading at one of the lowest forward Ps I've ever seen it at in its history. Meta's trading at an incredibly low forward P right now, right? Mattel's trading at an incredibly low forward P right now. But this is a market that if you come in and kill it, you still might not get gains. Okay, that speaks volumes about the state of the market we're in right now. Now, this will not last forever, but it is what is lasting right now. Okay. Now, I want to play you guys because Enphase is reporting tomorrow after the bell. By the way, the big one tomorrow is Amazon, right? I'm going to be reacting to all these earnings. Tomorrow's even crazier than today, by the way. I'm going to be reacting to all these companies' earnings after the bell tomorrow. But the Amazon is going to be my main focus. That's the third biggest stock in the public count, and that will be a stock in which I will be heavily focused on. We're listening to an entire conference call tomorrow. But what I want to play for you guys is an interesting segment here in which these gentlemen are basically talking about, theater mode. These gentlemen are talking about Enphase and a little bit about this business model I thought was interesting.
The boost in Tesla that has created a lot of the demand for EVs, which has also been pushing the demand for solar. We've reached a turning point now. We are now, I think now that 2020 would signal like the bottom of the S-curve where the S-curve starts to rise. You're right that interest rates do keep people holding back, but what you're seeing is a pent-up demand. It's people waiting for the right opportunity. We're no longer having to justify euphoria. Everything just goes crazy to the moon. And then eventually that euphoria comes back and it just bites everyone. This industry is one of those things that you have these peaks and why are you sad that it's like someone was commenting by buying Enphase today. Enphase is finally under $100, finally back under $100. And it makes me believe that the market does not understand this company either. It's just they didn't get the story. I thought, oh man, it's too late now. Everyone's kind of onto Enphase. If you remember 2021, it was kind of like the safe haven for a lot of money for a long time. It was just this super resilient stock. It's like, oh, these guys are buying and holding long term. No. So I'm actually happy about it. Haven't had a chance to buy. I literally just woke up, maybe 20 minutes ago. But yeah, it's when I get a chance to. And if Bitcoin's not going to do what I need it to do, or at least in the time frame, then I might have to deploy some of that capital because there is a cost of not deploying the capital now at this point with the market where it's at. And I'm like, there's only so much I can hold off and wait for Bitcoin. So I might have to cut off some of those funds and redeploy somewhere else. And Enphase at $96. I mean, that's part of what I want to get to today.
But like the thing that I don't get, Carlos, is that aren't you worried about the cyclicality of this business? Like I've seen this happen in the past, where solar has this wave of euphoria, everything just goes crazy to the moon, and then eventually that euphoria comes back and it just bites everyone. This industry is one of those things that you have these peaks and these valleys, and the thing is like the distance between the peak and the valley is pretty big. So why would you want to be on the other end of that, like trying to catch that valley? Like you know what I mean? Like right now, you can tell demand for solar is going to be down across the board because of high interest rates. Why not wait until interest rates come down to a point where it makes sense to go into the trade again?
All right, well, to answer your question,
It's a really good question by Chris. Really good question. I really appreciate that question, and it's a fair question, right? When you're in a business that is in significant, we don't know for sure if Enphase is in decline yet, but based upon SolarEdge's numbers, there's a real potential that Enphase could be in decline. And if Enphase is in decline, and let's say their numbers are going down in 2024, why step in when a company's numbers are getting worse, right? Why not wait for it to maybe bottom out or get close to bottoming out?
Thousands of shares of Enphase, thousands with an S. And so the only way I can do that is by accumulating over a long period of time because I don't have hundreds of thousands of dollars like Mr. TJ the Wheel Deal and come in and scoop up 8,000 shares, right? So I need time. I need time to accumulate. You can be right. I think you can be right, but in investing, you also have to be early. The earlier you are, the less it matters the price that you buy because you can accumulate the shares. So yes, you're right. Historically, solar has been really cyclical. But you have to understand, just in the last 4 years, since 2020, since the boost in Tesla that has created a lot of the demand for EVs, which has also been pushing the demand for solar, we've reached a turning point now. We are now, I think now that 2020 would signal like the bottom of the S-curve where the S-curve starts to rise. You're right that interest rates do keep people holding back, but what you're seeing is a pent-up demand. It's people waiting for the right opportunity. We're no longer having to justify whether it's a valid investment or not. People are just looking to wait for the right time to do it. And from all of the installers that we've talked to, there is a lot of pent-up demand that they have. People are just waiting for the right financial or the right credit landscape. So I don't think we're in a place where people need to justify, is solar a worthy investment or not? It's a matter of how long it's going to take you to get back that initial investment. But if you know that you want solar, all you're doing is waiting to get a better rate on the loan, and you're going to pull the trigger on that. If you have an EV, you've already looked at solar. If you looked at solar, you're probably already looking at an EV. This is not about having to justify whether it's worthy or not. This is about people looking for the right environment. So these are the companies that are going to benefit from that when that spigot actually opens up. And we are still very, very early in the overall adoption. So there are plenty of customers. They're still there. There's plenty of customers for a lot of companies to just basically grow 50%, 100% year over year until we reach a plateau. By the time we reach a plateau, you're talking about, right now Australia is, I think, 40 or 30% penetration. The amount of installs that this guy from Australia is doing in basically a city that's comparable to like what New York City would be. They're doing like 100 or something.
So let me ask, why don't I have solar? Payoff too long, to be honest. By the way, it's JEREMY, not JEREMEY. A lot of people spell it like that. JEREMY. The payoff's too long in regards to that. It's just too long of a payoff. Way too many years to make it financially worth it, especially, when it comes to the two homes I have in Vegas, both of them are extremely energy efficient because they're both relatively new builds. And so my electric bill is not that crazy even in the summertime. And so it doesn't make financial sense as of right now. It could change in the future, but as of right now, it really doesn't.
Installs a month. I mean, do you have any idea how much money this company's making? They're buying like $10 million worth of Enphase inverters for like half a year, and they have the warehouse so that they basically act like their own distributor. The guy showed us a video, which we wish, like, it happened after we did the live stream, which the next time we talk to this guy, we're going to have him do a factory tour. The guy had something like 300 Enphase batteries just sitting on pallets, like thousands of pounds of Enphase batteries just ready to go, ready to deploy. It's like, he's like, we can't keep up with the demand. An ecosystem of secondary installers have opened up around him for the surplus that he can't handle. And so he's like, this is a booming business right now. Rates have slowed things down a bit, but they haven't stopped it. And Enphase hasn't stopped their innovation and with what they're doing. So I did want to look at some of what you guys talked about yesterday, because I had the
when is
podcast, like I was driving to work and I was listening to you.
When is Fubo's earnings? I haven't seen when Fubo's coming out. So let me know when Fubo reports, and then I'll let you know if I'm going to do their conference call.
You guys, and I'm sitting there yelling at why would you say that? Oh, man, if I was on that podcast, So I'd love to talk about some of the points that were made yesterday, or some of those bear points, and then especially the question about Tesla that somebody had, which I think deserved like a more thorough answer.
So may I ask, if I watch Finance Junkies every day, I don't get to see it every day, but I figured like they were going to talk about Enphase here, so I was like, I tuned into a really good episode, because I'm actually just interested to hear these perspectives on Enphase, being that the stock has been, dropped from $300 to under $100, and the company has been pretty impressive over time.
Okay. Let me see. Let's just take a look at the chat for a second. Why isn't it here? Let's just go back a little bit. Holy God, the green candle. Yeah, the God candle.
Fubo, November 3rd, I'll probably react to their conference call on here, especially if we don't have something bigger going on that day.
Look at it, actually. Can you pull up a BTC chart?
Like what time frame?
Just $1,000 in a single day.
Yeah, boy, it's valued at $33,000.
And then there's no more after that. And it's not like you can see, and all their buys and sells are.
Have you seen this?
Hold it up. Just listen to that guy. If you just put 10 down, what if you're on the chat? Why aren't you in here?
And to be honest, it's a bit of a meme stock.
You only increase adoption as these people
a week time in the next 6 to 9 months, right? And even further out, that material weakness is going to really impact. I sound like Ben Shapiro.
Yeah, you sound like that. You do.
I don't care about your feelings.
Right. Yeah. Have you ever put him on 2X? You put him on 2X, you can't. You just can't.
It's like a Tommy gun.
Basically, just words, verbs, adjectives.
So the question I would pose to a lot of people is, looking at the numbers that they're showing right now, backwards, maybe look like, hey, this is pretty some good value. But if they're telling you, like, hey, listen, next year, next quarter, next quarter, we may end up doing $200 million less. Just realize that the company is telling you we're not going to do good. So why are you there?
Okay, so your question is, why would you? You're telling you that the company's not going to hold on. Which Chris do I have to remove? So you're saying like the company's telling you that they're not going to do well. But it goes back to what I was saying. People, once they get a solar system installed in their house, it's not like you return it. You don't return it, you don't get rid of it, right? And every time that you have one, people do ask you about it. It's very much like seeing EVs out on the road. People ask you about it. Or people that have EVs say, hey, do you have solar? There's a slow adoption rate, as like the word of mouth takes time to spread. But you only increase adoption as these people talk to their neighbors, or even when your neighbors come by and they see the system on your house, they ask you questions about it. I get probably a question a month about it. Somebody walking by asking me about solar or about the EVs. My next door neighbors in particular that I share a fence with, I'll pop over and be like, oh, how's that working for you? Or some of them have tried, but they don't have necessarily the right type of roof. So my question is, especially with all of the government incentives that are pushing us in this direction, why would you think that either solar would flatline or that it would actually decline? The government is telling you that they want all EVs by whatever, 2030, 2035, I think they said. Or maybe it was a lower threshold, like 50%. But the government is subsidizing and investing and incentivizing people to go in this direction. That's not a headwind, that's a tailwind.
Well, I mean, to me, there's a couple of things that really make this like not the greatest thing to be in. So number one, you're absolutely right that there is definitely a push towards more, renewables. So I'm not disagreeing with you on that. But I think you guys are woefully like, well, you know what? I think you guys are overly optimistic on the prospects of one company dominating too much of the market share when there are competitors that are likely to commoditize this. So when I look at the solar industry in general, the way that I interpret it is, well, the panels themselves were able to be commoditized. Why can't the microinverters be commoditized? And then at the same time, unlike solar panels, well, I mean, just like
that's a good question. That's a good question. Why can't the microinverters be commoditized? I think it's a very fair question that everybody has to, assess that risk of the possibility of a commoditization there.
Solar panels, actually, you had competing solar panel technologies where you had monocrystalline, polycrystalline. So what ends up happening is you're going to see that same thing where you have competing technologies in string inverters and power optimizers there too. So I'm not disagreeing that solar can be a big thing. I'm just saying, hey, from a business value perspective, I don't see Enphase being that market dominant leader for years to come, especially with other companies creating products that may end up undercutting them, and that margin may end up getting compressed severely. So right now, Enphase.
By the way, in regards to Metastock, I hear people arguing in the chat about Metastock. Oh, it doesn't like a conference call. No. At the end of the day, it's the market we're in right now. Those numbers were shocking that came out. The beats were insane, and the stock was hardly moving up. The bottom line is the market doesn't want any piece of anything right now. For whatever reason, the market wants no pieces of anything. It doesn't matter. What Meta could have said the greatest things ever on that conference call. It doesn't matter right now. That's the market we're in here short term.
Enphase has some of the best margins, if not the best margins in the entire solar industry. Yeah, which is kind of crazy.
I want to stop you there because the part that I think
market doesn't even want Microsoft. Microsoft barely made gains today after a phenomenal earnings from them. Market wants nothing to do with anything at the moment here in the very short term.
I was really looking at this, and I was looking at some of the comments that you made on Twitter. I think the part that we're not agreeing on, or that maybe you're not seeing, is that you're ignoring the installer that needs to install these systems.
This is a good point.
It's not about undercutting them. They're not necessarily looking for the best price on the gear. What they're looking for is they're looking for the maximum return on their invested time. So they want to come to your house. They want to spend as little time as possible installing it, both so that they can get more installs per month, but also so that they can limit the impact and the footprint that they have on the customer, right? Then after that, they want the minimal contact with that customer from that point on. So if anything goes wrong with the system, they want a company that's going to be able to quickly deploy any replacement parts needed, RMA, very quickly, and get the parts to the customer and also installed very quickly. So that's the part that I think you're missing, is that these products are not competing just on specifications or price. There's the installer there that has to make that decision, and a lot of that's decided by the distributors.
It's a really strong point.
Installer, he was telling us basically the distributors work out the deals with the company.
Both these gentlemen have extremely strong points, and that's what I think makes a fascinating debate here. What makes a great debate to me is not one side just clearly winning. It's somebody like a Chris making a great point of like, why can't Enphase's products be commoditized over the coming years, right? And then obviously talking about the high interest rate environment and whatnot, and Carlos explaining, well, what about the installers? Installers don't want to deal with just Chinese knockoff companies or this company or that company. They want to deal with the companies they've been using for years. This is what makes this such a great debate, in my personal opinion.
Companies, and they are the ones that buy these inverters directly from Enphase. And then there's a slight markup, obviously, because they're selling massive units. So they have a very small markup that they pass on to these guys. The larger volumes that they order, the closer they get to that same cost of the distributor, and then that's when they then further sell them to, now they get sold to the customers. But you have to understand the amount of inventory that these guys are holding, the amount of training that's necessary. Each one of these systems requires you to really understand how they work. And it's not always, and I know this just from the alarm business, when I was working in the alarm business, like I understood technically how the systems work, but there's something that happens when you install in each person's house or each location, that the way that these systems operate, they have their own personality. You understand like the types of things that go wrong with the system, or the advantages and disadvantages of each. Once you learn that, it's very difficult. That learning curve of each of the different manufacturers is steep. And it's a very capital intensive thing with respect to the training on the technician side and learning what the ins and outs of each system are. It costs you as an installer a lot of time. And so if you've already got something going great, you have a great deal with Enphase, you have the inverters are coming in, they're at the price point that you want, you're having no problem selling them, you have no problems with the installation, it's like a two or three day install because you understand how those systems work. Then once you install them, you have no problems with any of them, or like you said, an incredibly tiny failure rate. It's like less than half of 1% of all Enphase microinverters worldwide fail. So granted, as they deploy more, the actual number will be higher, but it's still such a small percentage. And when it does fail, I'm sure you remember, I don't know if we talked about this, that Badri was able to reduce the amount of the response time that an installer would get from when they called Enphase with a problem by 2 minutes. This was something that he was really proud of. It was a metric that he was proud of. So that means if I'm an installer and I do have a problem and I call Enphase when I'm on the job site, hey, I'm having a problem with this inverter, blah, 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 I want to RMA it. That's 2 minutes less that person had to wait. They removed people from the line so you get directly to the person. Those things, I cannot tell you, if you're the company that's sending these people out to service calls, because service calls are never things that you plan for. They're things that come up and they have to be added to your already scheduled work. The less time that you spend at the customer's house, the happier that they are, and the less money that you're losing. These are things that they're the intangibles that become really hard to sit and put on a spreadsheet.
100%. So, I mean, just a really good debate there, period, folks. Now, Google McDougal obviously dropping more after hours there, 123 now, down another 2% plus just after hours, right? Google didn't do anything wrong. Like Google reported their A+ quarter yesterday. They already got hit today nearly 10%, getting hit more after hours. This is the market we're in, folks. It is what it is. Until they decide to change things up here a little bit, it's the market we're in. There's nothing you can do. There's nothing you can do in this market right now. When you come through with an A+ quarter like Google came in with yesterday, when you come in with a perfect earnings like Meta just did, and you can't move up, that's the market, man. You're swimming against the waves right now. And that's the bottom line here in the short term, folks, okay? So tomorrow's going to be craziness, man. Absolute craziness. Amazon, Enphase, obviously Intel, Ford, and Chipotle all reporting. And obviously the main focus for me tomorrow after the bell will be Amazon. We will listen to their conference call live. I cannot wait for that earnings. So I appreciate every single person for joining me here today, folks. Thank you so much. What a busy live stream, over 3 hours long, like Donkey Kong. And appreciate y'all. Much love as always. Thanks for being here. Join me tomorrow. Make sure you got notifications on. Make sure you're following. So then as soon as I go live, you can join me on here. Very important to have notifications on, okay? Alrighty, guys, appreciate you. Much love. Thanks for being here. Thanks for following. Thanks for being subscribed. And I'm going to start preparing a video for the main channel video coming up, folks. Have a great day. Peace.